please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's now invite Mr. Tulsian. Good morning, sir. I hope you can hear me now. I was asking you about Titan. There are some brokerages who are worrying about second quarter numbers because the festive season is coming in later, and the company itself had guided for a lower than 25% sales. They had made it to 20 to 25%. What's your sense? Has the price fallen enough to reflect the new reality?
That's right, Lata. In fact, this seemed to be a foregone conclusion that they don't expect anything, positive coming in from the Q2 numbers, and the management has already guided for that. But I have always been taking a call that, see the range of the stock, and it is seen, moving in a range of about 810, 820 to about 900 rupees or maybe 880, and it has come to the lower end of the range ahead. But still, we still have about 1 month or so for the Q2 numbers to come in, and this is right because this time Diwali and the marriage season will start from the middle of November. So buying ahead of that will only start from the first week of October. So yes, the Q2 will going to disappoint, but I think that the same has already seen having factored into the price. And in fact, if you see the classic trading pattern of this stock, it has been moving in a range of about 810, 820 to about 880 to 890, for the last maybe about 45 days or so. So I think that share having corrected to the current level of about 820, may be looked into at the level of 810 to 820.
Okay, Mr. Tulsian, good morning. What about something like HUL? That's also corrected about 10%. Is this enough, or do you think it warrants some more correction?
See, Anuj, in fact, we have been taking a call, the renewed buying call. Yesterday in the afternoon also I've said that we are in fact quite comfortable now on the private sector bank. Few financials, in which one can include the stocks like maybe Bajaj Finance, L&T Finance, and the FMCG space also. Prominent amongst them could be maybe Britannia, HUL kind of stocks also, because they've already seen the good kind of correction. If you have the pedigree and if you have the seen growth, because mind it that this time the Kharif crop is going to be the record production, all-time high, and that will again be, seeing the good amount of consumption coming in. Probably people got gung-ho on the volume growth in the Q1, having seen from many of the FMCG company, but that was partly with the effect of the low base and the maybe that GST effect, and that has not seen having translated into the earnings in that proportion. But yes, having corrected by about 10 to 15% on the FMCG space, we are buyer, and in fact including on HUL as well.
Okay. Mr. Tulsian, today there is this meeting on ethanol. Now, I don't know if they increase the price, if they want to prepone the blending targets, increase blending, etc. But how would you view sugar stocks in this light?
See, again, the news flow is coming in that they may think to increase 25%, on the ethanol prices. If that happens, that will really be seen very good. But I have my doubts, because if you really see the ethanol prices now at about 45 rupees, and you cannot expect an increase of about 11.5 rupees on the ethanol prices to 56, because then OMCs probably may not find it attractive, because the petrol which we are buying at 86, 88 has a larger component of the tax involved into it. And we are talking of the sugar mill or selling price of ethanol at 55, 56, which is not seen likely. But yes, going forward, if the government will definitely be serious in including the blending program, because government has for the years, have taken a mandate to raise it to 10%, and they have not even reached to the level of 5%. But having seen the huge increase in the sugar production, even the coming season will be having sugar production of about 35-36 million ton. That can really give the huge boost to this blending program, because earlier the ethanol was not available. 1/3 was going for potable, 1/3 was going for industrial, and 1/3 was available for blending purposes. But now, with production having increased by about 30-40% in the current season as well as the forthcoming season, they can really, so even that happens, the acceleration of the blending program, even to the extent of 5% pan-India or maybe 7-7.5% will be seen positive for the sugar mills.
Okay. And I also wanted your take on Maruti. Mr. Tulsian, the stock has not been very favored lately. Of course, it's fallen a little more than the market has. What's your, now there is news which our colleague broke, that they're looking for for a new piece of land in Haryana, close to Gurugram, and they may even shift the production. Is all this relevant for you when you pick the stock itself?
See, Lata, again, as I've said for the financials, private sector bank and FMCG, same is the case with Maruti also, the victim of the overvaluation exuberance, which also seen having corrected and factored into the price. I agree that, the last 2 months sales, monthly sales, if you see it is at sub 1,60,000 vehicles per month has been, slightly lower. But I think once this festive season, which is, coming to about a month later, is going to see the good offtake of the vehicles coming in respect to that shifting of the plant from Gurgaon again, to in the same Haryana state is just a matter of the policy, and I don't think that there will be any kind of disruption because Maruti is a cash-rich company. They will create the infrastructure first at the new location and then will shift from Gurgaon, because already the Gujarat plant having stabilized at 2.5 lakh vehicles per annum, and even there the capacity increase is being made. So I think it will be a seamless shift from this one, and even if they do it, they shift from Gurgaon. I'm not too gung-ho, on the land monetization or the value of that, but I don't think that this will be seen any kind of disruption or any kind of extra capex being put on the burden being put on the company for this shift.
Just to follow up, sir, besides the overvaluation, do you think with rates going up so much, 8.2 on the 10-year, and definitely it's going to translate into higher lending rates by banks, does that usually act as a dampener for car buyers?
See, Lata, in fact, if you see the rate reduction, the interest rate reduction cycle has come to an end. And in fact, people will, if not in the near term, they will start accepting and realizing that the old days have gone. Now we have to think of accepting the interest rate hike effectively of maybe about 100 basis points as well in the next 6 to 12 months. And going forward, I think you may have the near-term disruption, maybe on the home finance front, maybe on the NBFC front, because that has been seen, little compression on the margins of the financiers as well as on the producers also, like the cars and all that. But I don't think that will really be seen of such a big thing, because it will be a natural acceptance by the borrowers also, which will be having a marginal effect on the vehicle purchases.